Okay, Kate, do you have another speaker for me?
Yes, we've got Eric Gebhard in the room.
Hey, Eric, how you doing?
Hello, John. Hello, Kate. I'm doing well.
You down
Hopefully
in
you can.
Southern California today?
Yes, that's right. Getting started early here in SoCal. Absolutely.
Yeah, it's no rest for the wicked, as they say.
It is a lot of wickedness out here.
There is today for sure. The market down 700. Why don't you go ahead and put your PowerPoint up and I'll read your introduction here.
Okay.
Upon graduation from the University of Southern California with a BS in Business Administration, Mr. Gebhardt acquired his Series 6 and 63 securities licenses and worked as an account executive with a mutual fund and insurance group. He then turned his efforts into the futures market, earning his Series 3 commodity futures license with an options specialty firm. He subsequently worked with two other futures brokerage firms before co-founding AltaVest in 1997. After several years, AltaVest developed a large client base of options traders. The AltaVest team saw a need to make complex option spreads simple. They then developed the ThetaTrader, which pre-selects complex multi-legged option trades on stock indexes and automatically manages risk and reward. The ThetaTrader technology allowed for the creation of a unique six-leg option spread structure called the Dragonfly. ThetaTrader also utilizes an integrated trade alert functionality wherein to respond to an alert, the client only needs to touch accept or reject on their smart device. Mr. Gebhardt also worked to make automated future trading systems available to AltaVest clients via a user-friendly platform called AV Systems. The purely algorithmic-driven systems on the AV Systems platform, as well as unique option strategies, offer non-correlated investment opportunities. Mr. Gebhardt enjoys spending time with family on adventurous outings, along with vintage automobiles, bike riding, and church activities. He also volunteers as a member of the Dean's Advisory Council for La Sierra University's Zapara School of Business. Okay, Eric, you have until 5 minutes before the hour when we give away our next batch of prizes. I'm going to go ahead and mute myself. I can see you're up on your screen. You have
Okay.
automated options trading up. So everything is working. I'm muting myself now.
Great. Thanks, John. Thanks, Kate. And we're going to look at automated options trading. Like John said, we have a unique options strategy you've not seen before. I can almost guarantee you that. We have pre-built option spreads with automated risk and profit controls. We're going to look at hedging opportunities, which might have been very convenient yesterday, to say the least, and non-directional and directional strategies, of course. And we have a very, very unique trade alert functionality. You're going to want to see that. So with that said, remember, we are speculating, so we always have to take risk whenever we're trying to make money. Without risk, there's no reward. So do take a moment and read the risk disclosure. It is important, and I'll be quiet for just a couple seconds here. Keep in mind that all funds committed should be risk, capital, and past performance is never a guarantee of future results. I've got a lot of slides, and probably towards the end, I plan to run out of time, which is fine. So we're just going to zip through some of these quickly. A lot of these are just visual, so you don't have to read anything. But we're all familiar with this. Any market, any time frame, that's a lot of choppy action. But it's almost impossible, of course, to always sell the highs and buy the lows, or even take a bit out of the middle. It's not that easy. So we don't even try to do that. We're looking at trading index options using our proprietary automation. So don't be this poor trader here struggling with orders and what to do. We like to use this as our model, using algos to do some of that heavy lifting. And we are AltaVest. Just a little background, we are a registered introducing brokerage firm. We've been doing this since 1997. And there I am in the middle there with some of our colleagues down on the S&P 500 trading floor, the options pit. We've traded millions of contracts over the years. We're registered with the CFTC, member of the NFA, located in California. These are some pictures I took on some of the visits down to New York and Chicago. does not look like that anymore, folks. And that's a little bit about what we're going to talk about. We've traded millions of contracts. Like I said, that's actually the closing there on the New York. I think that was coffee, sugar, cocoa exchange. A little blurry, but still you can see how active and busy it is or was. So do not be this poor guy here, stuck alone in your basement, trying to figure this out by yourself. Use our experience. We've done this for decades now. And what we put together, I think, is something that people find very, very useful. And just a little bit about myself. I've been doing this since 1991. That's when I was licensed in the futures and options industry. I have my BS in business administration from USC. So if there's any Trojans out there, let me know. And maybe you've seen some of our webinars in the past, some of these other locations. And if not, that's fine too. We've got a great one planned for you. And I began in the mutual fund industry, securities and insurance, and soon moving into futures and options. And I also have my Series 65, which is an investment advisor law license as well. So with those introductions out of the way, let me know how many of you can relate to these 3 barriers to trading. So feel free to jump into the chat room there. I can't always watch because I'm presenting, but which ones do you relate to most? And if you're actively trading, what kind of trading are you doing? Is it more of a swing trading? Is it day trading? Or are you maybe just longer term investing, maybe not trading at all so much? But is it true that only a few percent, 1% of traders, day traders, are profitable with a 1% success rate? Well, some studies suggest that. Let's take a look at this article here. It says Charles Schwab analyzed their active accounts over a 6-year period, and those active traders substantially underperformed a simple low-cost indexed fund. And here's another Taiwan study, 15-year period, less than 1% of the day traders were consistently beating the market. And then out of Brazil, 3% of the day traders made money and less than 1% made more than the Brazilian minimum wage. So very difficult to day trade. Even the professionals, not necessarily day trading, but they're always moving their books around, of course. In 2021, almost 80%, 79% active fund managers underperformed. In over 10 years, 80%, 86% of active fund managers underperformed. And what about social media? Maybe we can look to social media for help. Let's not count on it, folks, because really being popular on social media means never criticizing. Almost rarely is someone popular because they're short. Here's this one, Bloomberg, the day trader army loses all of its money that it made in the meme stock era. So during the pandemic, all the money that was made, looks like here, the amateur investors who jumped down during the in the lockdown, they have given all their money back, according to Morgan Stanley. So here's an example here. Here's a guy on TikTok says his parents gave him 500,000 and now he's down 96%. So we're going to avoid this, hopefully, guys. Don't want to look to social media for your hot tips and tricks. Even pundits like Jim Cramer, yeah, I'm going to pick on him because he's well known, but here he is, March 25. I highlighted that date this year, March 25, the bear market is over. Here's his call. Of course, he's got a lot of guts to make, a call on TV, which I give him credit for, but here's the result. Here's when he made that call saying the bear market's over. And NASDAQ here, we're down about 26%, maybe even a little bit more after today since that. So let's not rely on the pundits and the so-called experts. A lot of times they're pumping up their own book, their stock, they're telling stories, selling narratives. That's all fairy tale stuff. So, but how do we even beat the market if you're day trading? If you're trading, maybe you're doing well, but are you even beating the market? Is it even worthwhile? Here's some studies that say, just looking at hypothetical generic, let's just call these, they call these monkey portfolios. 96 of the 100 monkey portfolios beat a generic cap-weighted index and outperformed the benchmark by 1.7% per year. So even some random portfolios can do better than the indexes. So perhaps we should hire this creature here to do our trading for us. There's our best hedge fund trader there. And what about number 3, the third barrier, your emotions? Well, we all have them, of course, but how do we control those emotions? I think that's probably, I don't know, maybe I'll admit it was maybe my biggest barrier, and it might be yours too. But This is so true. Markets are always correct and we aren't. It can be expensive trying to convince the markets that you are correct. That's from Ed Sequoia. He was featured in Market Wizards. You have to read that. He's a systems trading pioneer. So don't end up like this. You don't want this on your tombstone, arguing with the market. And you want to stay off this emotional roller coaster, this cycle of emotion. You start out your trading career, so to speak, optimistic, and then you're euphoric when things are going your way. They start to fall apart, and now you're desperate. You wave that white flag. You probably end up selling the lows, and now you're despondent, but you get a little more hope and relief, and then you're optimistic again. So let's stay off of that roller coaster. But it's difficult to do. There's a lot of noise in the marketplace. You've got, everyone chattering, and you've got all the business channels and, social media, friends and family. Everyone has an opinion. But it turns out we can become our own worst financial enemy. And that's according to Motley Fool. And I agree with that. I think that's a good summary there. Our worst financial enemy is ourselves. There's confirmation, there's anchoring and recency bias. I won't go into all those, but I think we all have an idea what that means. If you've got 3 winners in a row on some technique, you're probably going to just keep doing that, thinking it's going to continue that way with no modifications or no assessments or no adjustments to what you're doing. And maybe that's not always the best way, for example, but it's easy to think you're a genius when things are going well. But let's avoid this. Let's avoid this trap. And it turns out that algos are dominating the marketplace. And of course, they have no emotion. So that's your competition, folks, this robot. What percentage of trading is algo or algorithmic or machine driven or HFT, whatever you want to call it? JP Morgan, 90% of equity trading. So when the markets are moving and you're sitting behind your screen, it's not you and your colleagues moving the market, folks. It's machines. It's not us. So that's our competition. Robots are outwitting humans on their investment picks. That's called revolutionary trading. Here's what it used to look like years ago. Little video I took. I won't play it because we're running out of time already, of course. I've got a lot to get through, like I said. But here's our competition. I want to get to the demo, by the way, so that's why I'm kind of getting through this. This is what you're competing against, full automation. So in minutes a day, we're going to look at algo-driven option spreads in your portfolio from markets that are moving up, down, or sideways. So we're going to look at automated technology for these strategies, market conditions. Like I said, it doesn't really matter for these different strategies, but there are some bearish hedging strategies as well. We'll look at a couple of those. But the way we're going to look at this is how an insurance company does things. I'm sure you're all familiar with how they make money and how they do things and what their business model is. Essentially, they collect premiums from you. This guy here collecting the money here. So how can we kind of mirror that with options trading? How can we get paid our premiums to assume risk and manage time, sell time? How about insuring ourselves, hedging ourselves against risk? Well, we need a consistent and patient business plan and approach to doing things. And we look at math and probabilities and what are the longer term odds and how are they favorable to us. And just like an insurance firm, they're going to look at actuarial statistics, just basically math. That's it, probabilities. So what are these premium collection strategies? So that's what we're going to look at, as well as a couple of long option strategies, but we're going to focus on collecting premium. We're looking at base hits, selling short options. We'll be consistent and patient. We're going to manage that risk because we will have losing trades and manage that reward. Don't get greedy. We need the proper tools to make this happen. And we're going to look again at base hits. We're not swinging for the fences. We're not going for the grand slam trades. We're not that sexy, folks. We're trying to be slow and steady over here. And these are premium collection strategies, again, non-directional, bullish, or bearish. So these outcomes are targeted in advance with predetermined risk. These are called credit spreads. The way we do it, our positions are insured or covered, predetermined risk and reward, and it can be also for sideways or consolidating non-trending markets. We're going to look at strategies for that. And why are we going to look at index options on the stock index futures compared to individual stock options? Well, keep in mind an index is always going to be less volatile than an individual stock. And also with an index, it's easy to apply strategies for any direction. And then, of course, if you're following an index, you're really just looking at one or two markets, not thousands. I mean, I think there's something like nearly 7,000 different securities to track. So that's the benefit. There's some others, and we'll get into that. But here's a graph, and don't worry about this yet, but you can see here's the upper boundary of this trade and the lower boundary of this trade. And if the market stays within this realm here, this region, this trade should work out well. So that's kind of a wide margin of error. Is the way we look at these. That's a big advantage. And before we jump into the demo, let's look at the Greeks. Remember, delta, the way to look at delta, there's a couple ways, but it's really how much does the value of the option change based on the underlying. So let's take a look at this. Another way we like to use it is traders also use it as the approximate probability of expiring in the money. So for example, the delta is 0.25. That means there's a 25% chance it expires in the money on that option. But conversely, 75% chance it expires worthless or out of the money. So that's how we like to look at it and use delta. And a lot of traders do as well. But remember, delta is always moving. This number is always moving with prices and time. And it is not the probability of a winning trade. So let's also keep that in mind too. And there's also theta, that's time decay. So remember, options are a wasting asset. They have limited life. So theta is referred to as a negative number equaling 1 day of time decay. For example, if an option's at 10 points, then negative 0.05 is the theta. So then the premium the next day would slip to 9.95, and the next day after that, it would drop to 9.90, and so on and so forth, all things remaining equal. This is just for illustration. And here's what it looks like on a graph. You know, as you approach time zero, that percent of that premium remaining starts to drop. And eventually, of course, it always goes to zero. Okay, and here's a quick example of selling a call spread. Won't go into all the details, but you can see here the red line represents selling this call at 4.5 points is how much you collect. The blue line is the call you buy to cover it, but you have to pay 2.25. But the net result of this is you collect 2.25 points, and that's $112.50, and that's the E-mini S&P 500, for example. Of course, take into account your commissions and fees as well. Selling a put spread is just the same thing. Here's an out-of-the-money put spread. Again, selling that put, you collect $3. Buying a put to help hedge it, you pay out $1, and the net result is you collect 2 points or $2, and let's just call it points. I don't want to confuse you here, but you collect 2 points, and that's $100 in this case, minus your commission. So remember, these are not naked options. No naked creatures or no naked trading allowed, folks. Sorry. If you're doing naked options, don't. I've never seen it work out in the long run for anyone. They do well for a period of time until they give it all back and then some. So always do covered spreads where your maximum risk is capped in advance. And another benefit, there's no margin calls when you trade with covered spreads. So you don't have the market trading you, and you don't have the brokerage firm closing out your positions or telling you to send more money. And that's a huge benefit. Only do covered spread strategies. And of course, there's no unlimited risk when you're trading covered options. Here's something called an iron condor. It's a crazy name, but it's really just a combination of the put spread and call spread that we saw. And this is what it looks like on a graph. You sell an out of the money call spread, collect the money, sell an out of the money put spread, and collect the money. And you look for the market to stay in that range between the two upper and lower boundaries. Now here's our proprietary strategy and a variation on a condor. And let's take a look. It's called the dragonfly. And it's 6 legs. It's a variation on the condor. So it's a premium collection strategy. And you can see here, there's 6 legs, and I'll run this example through. This is what it looks like on the structure. You sell 4 of these calls here. You buy 3 further out of the money, and then 1 closer to the money. And I'll point out that this one that you buy, in this case, is 50 points closer to the money compared to the 4 that you sold. And that changes the risk-reward dynamic tremendously in many cases. And the same structure here, you sell 4, you buy 3 further out, and then you buy 1 closer to the money. And again, 50 points closer to the money in terms of the one that you bought and you own. And we're going to look through that in the demo. So a couple more unique strategies. We'll get through these real quickly here and into the demo. How about just doing half a dragonfly? So doing just the calls. Again, that might work if the market just goes sideways, if it drops in value, or even if it moves modestly higher. And that's what it looks like, just doing the call side of a dragonfly. And there's something we call a bear hedge strategy. It's a name we came up with for simply selling an out of the money call spread, collecting the money, and then using that money to buy or finance the purchase of an out of the money put spread. You can usually do that for even money. And we'll show you how to do that. But here's the question, folks. You're just as confused probably as Jackie Chan there, scratching his head. How do you even go about creating these spreads? Which markets do you apply them to? What strategy? What's the correct pricing, the timing? How do you manage it? Well, that's what ThetaTrader does. It's pre-built option spreads. Our algo, our proprietary algorithm, will create what we call theta trades. And everything's automated, bull, bear, and flat market strategies. And then we, of course, have the RTI. It's called our risk thermal indicator. It's a color-coded automated risk and profit tracking tool. So effective, simple option spreads with profit and risk management automated. So we're going to jump into that demo. Give me just a moment to switch screens. Okay, so now you are looking at my ThetaTrader demo page here for the webinar. This is the dashboard for ThetaTrader. And I guess if you can't see it, you'll let me know. But yes, I think you should be able to see that. And this section here are the theta trades. These are your open short positions, any open long or bought positions. Here's your account information, and this is all pulled directly from your AltaVest trading account. So everything is integrated with your AltaVest brokerage account, and this would be any current quotes here. And we shall take a look here. You'll notice there are bullish strategies, bearish, and neutral. These are all pre-populated. And we're going to look at, since we looked at the dragons and the condors here just a minute ago, here's what it looks like. If you want to look at a condor, this is what the algorithm has served to us and delivered to us. You can see there are trades anywhere from 16 to 65 days till expiration available. And the strike prices are already pre-selected and the pricing and everything. Let's point out, this is your potential profit at expiration. That's your maximum profit potential. And this is something called the targeted annualized return at expiration. I want to point out that you cannot realistically expect to generate a 293% annualized return if you place this trade. That's not what that means. It just means this number here is meant to compare this trade to all the other trades and vice versa. That's why it exists. And if you want to take a look at another example where we drill down, let's look at the one with the most time. I typically do that for these webinars. And again, this is just a webinar demo account, so I wouldn't make too much of the trades on the board at any one time. But first thing I like to do is look at a graph. Here's where the market's trading right now. Here's the call spread you're selling and the put spread you're selling. And we'll look through some of these numbers. I won't spend a lot of time, but you can see days till expiration, the expiration date, the premium being collected, your put risk, call risk, commission, available capital, cash required. This is your profit potential. This is your targeted return on cash, or the TROC, and again, the targeted annualized return. And you'll notice the strike prices are already pre-selected for you. It defaults to a sell because you're selling the condor, collecting premium. Quantity always defaults to 1. If you go to 2, you can see the cash required moves up or down. Go to 3, moves up again, and so forth. And the pricing, you can leave it that way or you can change it. And of course, you could change any of these strikes if you wanted, but you're going to break some of the rules within the algo, and you might get a warning signal as well. But I think the whole defeats the purpose, really. I think you want to use the algo and just do what it says. That's the whole idea. But let me point out the delta. Again, The put you're selling has a 9.96% delta. We talked about delta, so that means there's a over a 90% probability that this option strike price will expire out of the money. And look at the call, 7.1. So you have almost a 93% probability that this call is going to expire out of the money too. So that's the way we look at the deltas in terms of our trading strategy and approach. And what you can do here, and I want to also point out that all the numbers and all the data and percentages, it's always net of all commission. So I want to point that out too, but it's just that easy. You want to place this trade, you do a quantity of, in this case, 3. And there it is. It shows up that you've got 3 that you're filled with, and there you have it. Just that simple. Now, let me go back to the dashboard and let me show you a dragonfly real quickly. And then I'm going to run through a trade simulator. We can go backwards in time and do back testing. Really, really great feature. Okay. So we'll look at a dragonfly. And again, these are the dragonflies the algo has selected and built for us. You'll notice the targeted annualized return is always going to be a little bit less or quite a bit less depending on the strategy compared to the condor. And I'll show you why. And quite simply, that's because with the dragonfly, again, you pay money to buy this one call and this one put. That's additional insurance or an additional hedge. So that additional insurance cost money. That's why your targeted returns may be a bit lower compared to a condor. But you can see here, this particular dragonfly settled at a value of 10 points or $500 in premium. Your cash required is 4,584, profit potential 416, targeted return on cash, and targeted annualized return. So you can see the cash required is a little less than 5,000 for a dragon. A condor is about 1,000. And of course, that makes sense because you're doing in increments of 4. So everything is in quantity of basically selling 4 puts and 4 calls. If you were to do 2 dragons, it would be 8 puts and 8 calls, and so on and so forth. But always defaults to a sell. Here's a quantity. You can see changes the cash required there. And we'll just use the default there and go ahead and place that order. Just that simple. Now let me going back to this and let me show you a trade simulator. And I've loaded these and hopefully it works okay. I'm just trying to save time with some preloaded backward testing here. But you go here to trade simulator and it'll pull up a window and allows you to go backwards in time. Let me squeeze this down. Okay, so here's a condor, end of month August condor. And you can use these controls here to go, you can see forward in time. You can see it started with 57 days till expiration on July 6, 2021. And then each day goes by and it gives you the P&L, and the RTI is green. I'll explain these colors in a moment, but green means good and do nothing. And you can use the play button, or you can skip right to the end. But you can see as theta decay starts to work, the P&L starts to turn green. And then it turns blue on August 20th. So that means take profits. And here's the important point, and I'll pause for just a second. This can be automated. You can choose to have ThetaTrader monitor and scan your account and then automate your trade exits. So you don't have to screen watch or babysit your trades. Once it turns blue and gives a profit-taking signal, ThetaTrader will automatically submit your order to close out that position. All right, so that's kind of how a typical condor might work. This one worked out well. He had 12 days till expiration, and it closed out that trade. And we're always going to be out, by the way, before expiration. Never hold the position till expiration. Now, here's the dragonfly for that same day. Same day, the August end of month. All is well. And it turns blue or profitable on August 4 with 28 days left. So let me go back and show you this one. You had to wait till August 20th before you had a profit signal on the condor, but on the dragon, you generated a profit signal here August 4th. So you're talking about, over 2 weeks earlier, that trade matured enough. And that's the big benefit of the dragonfly compared to a condor, is oftentimes, just depending on market conditions, of course, the dragonfly will mature more quickly than a condor, and it'll allow you to close out the trade earlier and then move on to the next trade. And I'll look at some other differences here as well. This is a bear hedge example. Remember, you're short this call spread, you collect that money, and then you use it to buy an out of the money put spread. And don't pay attention to the colors at the moment, but you could just, actually, we can just skip to the end. But you can see here how if you just hang on to something like that bear hedge, it can work out well when the market moves lower quickly enough. But of course, it has to move in your favor without expiring, because theta decay is working against you as well. Now here's also just doing half of the dragonfly. So we looked at, the dragonflies back here. We saw how, you can look at the dragonfly as kind of a non-directional approach with the calls and the puts on both sides. But in fact, I won't even go backwards there. But anyway, you can look at the chart. So that's a full dragonfly, calls and puts. But you can just do half of a dragonfly, for example. So you just do the call side. And if the market goes sideways, or it even moves up a little bit over time, or drops, then that trade's going to work out. And this one, obviously worked out well, matured early, and allowed you to pull the plug on that and move on to the next trade. And here's another bear hedge. I think this is like a shorter dated bear hedge. Maybe if you want to plan for an event, earnings or FOMC announcement or something, and you think it's going to move an index or whatnot, this is just a shorter dated trade, 11/22 to 11/30, for example. So you can do this on shorter or longer dated time frames. And let's look at another example. Here's another condor, December into month. I kind of forget how these all play out, so it's kind of fun for watching. But here, let me point out here, turns yellow, that's elevated risk. It turns orange, that's more elevated risk. And the trade is negative at the moment. You can see it's red, the P&L. But ThetaTrader and the RTI says do nothing, just stay with it. And then it turns red. So you end up taking a loss on this condor. So I wanted to point out that I'm not just showing everything to cherry pick only winners here. So there's an example of a trade that just didn't work out. And again, if it turns red, you can automate this so that you're automatically closed out of that position. And let me take a look. Here's a dragonfly. And this is the dragonfly for that same expiration. And then it also took a loss as well. So I wanted to point that out as well. So no trade is impervious to losses. And we'll look at a couple more here. Here's a condor. And again, I'm not sure I recall exactly what this does, but that's okay. We're going to watch it together. So it's going well, nothing going on here. It's yellow, a little bit elevated risk, and that makes sense. You're getting closer to that upper boundary. Oh, then it starts to get pretty volatile. Then it turns orange, a little more risk, back to yellow, back to green, back to orange. So if you were trying to follow this on your own and didn't have a process or some automation to help you in an algo doing the calculations, you might be banging your head against the wall. And then look at that. It turns red. You end up with a loss on this condor with 12 days remaining. The volatility really picked up dramatically. But let's look at a dragonfly. That's the same. This is the March 2020 expiration. So here, March 2020. So instead of a condor, what if you'd done a dragonfly? Scroll down here. There you go. there you go. Look at that. It actually turned blue and was profitable, would have generated a profit-taking order. So that's one of the big benefits to the condor, to the dragonfly compared to the condor is, again, you oftentimes get a chance to get out earlier compared to the condor. You don't have to wait around. You can take your money and run to the next trade. And there are times when a condor takes a loss and a dragonfly won't. So that's why we really, really love the dragonfly. And here, let me show you exactly. This is where you can learn a bit more about the color coding on the RTI right here. There's a help file. I won't go into that just to save time. And then here is where you go into your settings, and to automate everything, you just activate that risk manager here, and you activate that profit directive, and that's all you have to do. And if you do that, click those boxes and then save those settings. And then if it turns, any trade that turns blue or any trade that turns red, ThetaTrader will manage it automatically for you and place those orders for you. So you're always going to be out before expiration. So it's just that simple. Also want to point out we have daily proprietary research, something we do here called TradeScope. We do a bit of analysis, chart review, and then we give you a market outlook on what we're expecting moving forward, what the setup is. There's some Fed target probabilities on rates and whatnot there for yesterday, or for today, I guess you could say. People love using that to help inform their trades. And then we have video tutorials here and education. It's all part of ThetaTrader. It's all embedded for our clients. And of course, there's one other thing here I don't want to forget. It's our daily commentary and daily trading summary. You can see here what's happening in Asia and Europe and the US. Then we have a looking ahead section here, what to look for, some technical support resistance areas, and an economic calendar. That's a real quick overview there. People actually love referring to that every day. It's really all we need to know in terms of what's happening, because again, we're not really narrative trading here. We're using the algos to do that heavy lifting for us. So it's just that simple. Now there's probably the best feature of all, and let me show you that in just a second. You're going to want to make sure you see the best feature of all. And also want to point out, this is just my demo account. It would look a little bit differently for you up here. You wouldn't have the same menu. And if you want to also look at a page of your, go backwards in time, you can go back to your history here, or you can see all your open positions on one page. I don't want to spend a lot of time on that, but you can see your open positions, of course, just right on the dashboard like I'm looking at here. And it's segmented here for short and long positions, but you can also see here on one page, you know, maybe here's a dragonfly as one of your open trades, and you want to kind of take a glance at it and drill down a little further and sort of reference when you got into it, what the market was doing at the time. So you just click on it and you scroll down, and you can see here, you know, you got into that on this date was 72 days and so on and so forth. And it went red, and then it's profitable again, and so on and so forth. But so it's just that easy to look at things. So with that said, and remember too, I wouldn't make too much of the results one way or another on the screen here. That's not the point. I'm just using this demo account, randomly placing trades like you saw when I'm doing webinars. So now let me switch gears. Just a second, folks. I see a few questions coming in there. Someone mentioning optionetics. No, this is our own proprietary technology. So I'm not familiar with what you're referring to there. Okay, so all right, folks, now we're back to the presentation, and let me show you what we can do to make this even easier. We have trade alert functionality, and these are quite literally 1 minute or less. And what do I mean by that? But they're one touch responsive. So you simply receive an alert on your smart device, and all you have to do is touch your screen to accept it or reject it. So these alerts are live, meaning they're integrated with your trading account. And you just touch accept and that order is placed, or touch reject and the order does not get placed. And here's a quick little video here. So you'll receive a text message with a link. So all you do is you touch that link, and then you'll get an alert here page. You'll see the graph. You'll see the premium collected, the cash required. You'll notice that the trade is already pre-sized for your account. And all you have to inherit, here's the days till expiration, your TAR, targeted annualized return, a current price quote. So everything you need to know to make an informed decision on that particular trade is presented right there at a glance. And then if you like what you see, you just touch accept. And that's all you have to do. So in fact, you can do this right now in the chat if you'd like to. Go ahead and enter your 10-digit cell number, and we can send out a free alert to you a little later on. So if you'd like to do that, give you a second for that. But remember, these alerts are all live, meaning they're fully responsive and fully integrated with your trading account. So you don't have to copy an alert or copy an email into your order platform and then mess that up. I hear that all the time, actually, from people. The buy-sell errors are the worst, of course, but this makes it very, very seamless. And the alerts, of course, are coming to you individually. They're tailored for you and your account based on what's already in your account or what's not in your account. And the sizing is appropriate based on the balance in your account as well. So everything is customized for you. All right, now with that said, how about the special offer to see how you can get involved? And thanks to Mad Hedge for having me. I actually enjoy the other presenters too. So if I have time, I always try to be a fly on the wall and listen to those presentations too. So here's the ThetaTrader membership. And this is what happens and how this works. And let me explain this. You get the Theta trades, you get the RTI, and you get the trade simulator. That software is valued at over $3,500. And then, of course, remember too, you get the trade alerts. That's all part of the ThetaTrader package. And those alerts are tailored for your account. They're integrated. You just touch accept. And then the RTI, of course, can automatically manage any open trade. As you saw, you just click those two screens to activate the profit directive and the risk directive. And that's all you have to do. And ThetaTrader scans for you and then submits those orders for you. $4,400 value. Again, ThetaTrader with the alerts valued over $8,000. But you also get people. You get real live people to talk to. This is not just an automated chatbot thing. So Series 3 licensed and experienced. You can do your 1 hour screen sharing sessions or 20 minutes, whatever you want. You can kind of have a co-pilot working for you, develop that relationship with someone who's licensed and experienced, review your trades, look forward to the future as to what trades. Value there at least $7,500. I think it's probably very, very undervalued. But again, to summarize, over $15,500 in value with that ThetaTrader membership. You get the software and a private coach. And just to be corny, yes, there's that extra bonus. You always have to have an extra bonus. Just don't want you to forget you have proprietary research. We looked at that briefly as well. Valued over almost $3,000 with TradeScope and that daily commentary. People love to refer to that. It's really all they need to look at for using ThetaTrader. And you have those online video tutorials that I referenced as well. So to summarize, ThetaTrader, the software, the alerts, a private coach, and the research valued over $18,500. And this is what we used to offer ThetaTrader at. We do live in-person events. In fact, it was actually $4,000. I think it was $39.97 at one point. And you still have people lining up in the back of the room, coming to the table, signing up. But we love these online presentations and webinars. And it's a lot of fun to do these multi-speaker events too. So we're going to do a much better deal for you. Not even $7.97, 80% off. How's that? You can't get much more off than that. So for a limited time, we do expire this, and it's a one-time payment of $5.97. So I want to make clear that it's just a one-time membership fee. That's it. It's not monthly, quarterly, yearly, one time, and that gets you a lifetime membership to ThetaTrader and using our services. And again, we've been doing this since 1997, so we're going to be here, folks. And here's how you do it. cf.altivest.com/mad. So take a screenshot or write that down. Oh, I see Kate put the offer in there. Thank you so much. And that's my direct phone number. Write that down as well. Call me anytime. If you call now, of course, I'm live. It'll just go to, I believe it's going to forward to someone who can pick up the call. And if not, it'll go to voicemail. But we encourage you to call us directly. We're real people. And here's the thing, there's no excuse, really. It's a 30-day guarantee on that membership fee. You don't have any risk on that membership fee. If you change your mind or life moves in a different direction, we understand. Just call us, say, hey, I can't do it. I want my refund. And say, okay, that's it. No arm twisting. Don't worry about that. A few FAQs, tax efficiency. Yes, futures and options are tax efficient according to the IRS section 1256. They're categorized as what they call 1256 contracts. And essentially, here's an example of someone trading individual stocks, and they end up with a $7,400 tax liability. Now, if you're doing that same trading with the same result with what we do in futures options, your tax liability is $5,360. So that's a tax savings of over $2,000 simply because you're trading in a tax efficient marketplace and environment. And there's also no more itemizing. All you receive is that 1099 with your result, and that's all you have to use for your taxes, your 1099. But of course, always consult your tax attorney or advisor. Want to make sure you do that. IRA accounts, yes, contact us for details. I'm going to go through some of these slides here quickly. I want to make sure I get to the end. And why the E-minis? Well, they're liquid, they're efficient, they're cost effective. And the E-mini marketplace, the S&P 500 alone, it's bigger than all the ETFs around the world by 2.5 times. So your average daily dollar volume. There's all the ETFs, it's still trading 2.5 times bigger, and it's almost 10 times bigger than the SPY. There's volume, liquidity, superior execution, offer a cost savings of $4 to $15 per contract on these ES options, so tight bid offer spreads. Largest market share, densely packed strikes have 100 annual expirations, ensure granularity and coverage. So what that means is when our algo is looking for strike prices and expirations, it's going to find it. That's what it means. And here's a key point with the E-minis. The orders that you saw being placed on the dragons, for example, and everything, it's all one order placed as one object at one net price. If you try to do a dragon on stocks, you have to break up the order into 2 separate trades. And it's a nightmare. You have to leg in to both separate legs. And you have to try to leg out to both separate legs. It's just not the same market structure. It doesn't work the same. Of course, another advantage, remember, we're tracking just a couple markets, not thousands. Margin use is efficient, and there's a clear cost structure. So what do I mean by that? Well, let me show you. All the orders are trading through Globex. It's an electronic exchange. Every order gets funneled and traded in the same way, equal treatment. There's no payment for order flow. There's no gimmicks like quotes free trading because there's no such thing as free trading, folks. Here, like Robinhood gets fined $65 million. People try to save a penny, but they're losing a nickel because the execution is so poor. It says payment for order flow is disguised commissions. If you want the broker to work for you, pay a commission. And nothing of value is truly ever free. And I think that whole payment for order flow thing, that party is probably over. It's just a recent article, Gary Gensler, the US SEC regulator, they're going to basically put a stop to that anyway. So anyway, our rates are 5.25 round turn all in, very competitive. Here's a screenshot from a big box brokerage firm just earlier this year. They charge 2.25, and you think, oh, gee, that's half what you charge, Eric. No, but that's per side, and they don't put the exchange and clearing fees in that calculation. So you add it all up, our rates are actually less than this particular example. And again, everything is net of all trading costs, and everyone's performance is different. Everyone uses ThetaTrader differently. It's a self-directed software tool. And how much to trade with? We suggest at least a minimum of 25,000 because you saw the dragonflies require $5,000 typically to trade. If you want a free membership, people love to take us up on this this here. $100,000 or more will rebate you 100% of that membership fee. If you do 50,000 to 100,000, we'll rebate half of that amount. People love to take us up on that. You can do all the different types of accounts that you're familiar with. Of course, an IRA, an individual joint corporate trust, so on and so forth. And then just to kind of round it out here, I think we're going to have enough time. Why even consider ThetaTrader? And well, we like to look at this as a non-correlated approach, an alternative approach to trading. And why would you want to do that? Well, that may improve diversification and lower portfolio risk. And why would you even need to think about that now? Well, I don't know. Do I need to remind all of us what's happening? NASDAQ's down from its November cycle highs, S&P's in fresh bear market territory, so on and so forth. But what's been responsible for this big rally? You see any correlation here, folks? The red line's the S&P 500, and look at the blue line. Those are the assets of all the global central banks, and now it's turning down. I mean, this is like the correlation's got to be 90+%. So, and the central banks are tightening. The ECB just tightened. Of course, we just tightened the most since 1981, was it? But that all results in inflation too. US CPI highest since 1981. Consumer stress, utility, gas, food, electricity, shelter, inflation, soaring. Look at gas prices. Maybe it's too painful for me reminding you, but CRB index, commodity prices in general, just screaming to cycle highs. Big part of that's energy, of course, and food. Record low sentiment. Look at this here. Sentiment is just at record lows. Consumer credit, all-time highs. Not a good sign. Credit card spending is surging. Consumers drowning in debt. Maxing out their credit cards ahead of the recession. Here you go. Mortgage rates, 6.28. I think that's a few days ago. I think it actually is now like 6.7 or something. But yeah, that's a big jump, folks. And this is what's happening to the pricing of homes of late. But I think you're going to see a shift here. New home sales are declining. And look at the payment here. From 2019, a $300,000 home, your payment was $1,200. And now your payment is just almost $2,000. And that's at a 5.5% rate. I think the rates are over 6 now. So here's the mortgage payments moving up. Look at this. The Atlanta Fed just the other day, their Q2 GDP forecast is now 0 or even going negative. So even the Fed's own bank is forecasting, here you are, 0, folks. So credit card debt all-time high, inflation 40-year high, monthly rent all-time high, gas prices all-time high, worst year since 1940. Recession is coming. The Fed always screws this up. Stocks will be in a bear market by summer. I left this in here because this was from April. So this person looks like they're going to be right. They say here the Fed will keep tightening as the markets go down. Well, you just saw that yesterday. So that's what they're doing. We're not going to focus on that. Just kind of have a little good humor at Powell's expense here. Inflation. No, there's no inflation. No, it's transitory. Well, blah, blah, blah. And okay, maybe you may lose your home, but you won't starve to death. So remember, these people are just academics. And yeah, I'm hard on them because they're supposed to be experts, but they don't have any real world experience doing anything. You shouldn't trust what they say, folks. You need to just look at what they're doing and look at what the market's doing. They're finally admitting they were wrong. Janet Yellen, Jamie Dimon, Goldman Sachs, all the globalist institutions, IMF, World Bank, UN, they're saying there'll be food shortages. So it's not transitory inflation. Here's what the purchasing power of the dollar has done since 2022 years. Kind of ominous, isn't it? Don't need to look at this. That's just income growth. But CEO confidence, it's its lowest level since the pandemic. This historically coincides with profit recessions or negative year-over-year changes in earnings. Look at this here too, probability of recession now soaring. But keep in mind, markets always mean revert. That's what I wanted to show you here. You know, this was just from like a month ago, so maybe we're down here, but markets always tend to mean revert. So here's the growth trend, that green line. So don't be surprised, folks, if you get a big pullback. You know, keep in mind, even a 60-40 portfolio may not recover for many years after a large drawdown. I won't go into all this, but we like the low correlation to alternatives. And let me just point out here, the benefits of sidestepping a bear market. So you can see here, the dotted line here represents kind of a bear market. But you can see here, it took 6 years after the tech crash and 5 years after the financial crisis to regain those prior highs. So things don't always turn around in a matter of months. And this is stating the obvious, but if you have a 50% drawdown, you know, you need a 100% return to get back to even. Kind of like with Bitcoin, down 70%, you have to gain 233% to get back to even. So many, many periods of years here, like on the Dow, where you know you have a decade or 2 decades of no growth. So you don't want to rely on all stocks or just stocks and bonds and think you're diversified. We think you need to have some alternatives that can be more nimble. That's why we like ThetaTrader in these particular strategies. And again, use that Mad Hedge special offer. Love to get you signed up, talk to us, and easy 5-step process to get you onboarded. I won't go into the details. Running low here, but we'll leave that last slide up, and looks like I've got a few comments and questions if I can scroll backwards here. Someone's asking about the Dragonfly. The Dragonfly, the calls and puts that are in a Dragonfly or Condor are all determined by our model, our algorithm. Okay, good. And yeah, thanks for the phone numbers. Again, if you want a trade alert sent to you, put your phone number in there. And we suggest a minimum of 25,000 to do this. Good questions. And unfortunately, we can't work with you if you're in Canada. I would love to work with you if you're in Canada, but regulators have decided otherwise. And this is all for AltaVest clients. ThetaTrader is an AltaVest technology product, and we are the brokerage firm. And I think that's going to wrap it up, folks. I don't want to go over my time limit here.
All right. Well, thank you very much, Eric. Always a very interesting presentation. And again, to take advantage of Eric's offer, just click on the chat box on the right.